Today we're going to be looking at the market, and I mean the S&P 500, Dow Jones, and the Nasdaq. The indices have been up the last couple of days, the last trading day. It's actually looking like we are moving out of the bear market. The S&P 500 is almost 20% from the bottom, from the lower low. The Nasdaq is already out of the bear market. The Dow Jones is still heading towards the 200-day moving average. The S&P 500 is just very close to the 200-day moving average. It's above 19 to 20% from the bottom. Guys, it looks like the market is doing something different. The market is not listening to Fed. The market is not listening to inflation. The market is not listening to increment, 0.75 basis. Look, guys, the best thing for you to do as of now is to look for a way to be in the market. If you are not already in the market, if you jump out of the market, you have missed a lot already. You missed in the month of July, we're in August now, and it's looking like you are missing a lot. However, you may have to wait a little bit for the market to breathe in, because it looks like the market is actually extended now, overbought. That's the language. But it is not too late for you to be in the market. You just have to do it strategically. However, if you have been dollar cost averaging all this while, in the month of March, May, April, you've been dollar cost averaging, then you should be excited. I am excited, to be honest. At least the market is looking, a bit more on the bullish side, which is what we like to see. I'm not saying that we are totally out of the bear market, but it looks like we are edging out of it. If anyone tells you they know what's going to happen in the market, or they can predict the market, we can all assume, there's an assumption based on what we see. But the last couple of days, at least from the 16th of July or 17th of June, the market has been on an uptrend. Right now, it's exciting to be in the market if you're already in the market. Let's have a look at the S&P 500, the Dow Jones, and the Nasdaq. Let's look at the chart. Let's look at price action. Let us see the direction of it and what we think would happen. Look, we can only suggest, we can say this is what is likely to happen. We don't know for certainty. The fact that you're listening to the likes of BlackRock, big names, Charlie Munger, Warren Buffett, that if they're going to be honest to you, they will tell you they don't know what's going to happen next. Warren Buffett is always saying that nobody knows what's going to happen in the market. And I can tell you that a lot of super investors will tell you nobody knows. And exactly that's what we have seen the last couple of weeks and days. The market is the market is on its own. It's on its own. Let's have a look at the charts. Let's see what we can deduce from the price action. Let's have a look. Here is the technical chart for the S&P 500. Today is 12th of August 2022. As you can see, the market rally has continued. The today S&P 500 has gained over 1%. But what I need you to see is the pattern of the movement from the bottom. This is where just let me this is where we actually bottom on S&P 500. That is if we agree that we may be out of bear market. But then if you can see the pattern from here, there has been a steady movement, and this is a bullish move. We are actually above
15-day moving average, and this is 50-day moving average, but we are below 200-day moving average. Um, the S&P is actually approaching or is high in the 4,227, 4,2765. That's where it's approaching. Um, Basically, we have not. This kind of rally is not common. The last 10 weeks, I mean, since June, we have been having this rally. This is a daily chart, but as you can see, from June 17th, we've had a good run up till now. June, July, August. Yeah, it has been ups and down, but it has been a steady bullish move. If you have been in the market, you have not been out of the market, you should have been up at least about 15% from from here. Let's have a look at the Dow Jones. The Dow Jones, as you can see, the charts are very alike with the Dow Jones as well. The Dow Jones is up. The Dow Jones is up over 300 points, about 350 points today. But I need you to also see here, looks like the bottom here for Dow Jones. But from here, as you can see, we've had a good run up rally, and that is June 17 or so. You see, in fact, the the rally has been phenomenal. Given the inflation is still about 8.5%. Was it? Yeah. Um, Inflation there was zero inflation in July, as in zero increment in July, according to President Biden also. But the Fed increment of interest rate by 0.75 basis. We don't know whether the Fed will do the same this month of August. But as you can see, given all the information here and there, the market seems not to be listening to anything. The market is on its own rally, on its own movement. Let's have a look at the Nasdaq. The Nasdaq appears to actually have been out of bear market. That's the Nasdaq. The Nasdaq. This is the Nasdaq. This is where we will agree that we bottom on the Nasdaq. But then, as you can see, just like the S&P 500 and the Dow Jones, the Nasdaq had also had a good run up. See, it has not been straight, but it has been a steady movement. The Nasdaq, it's up more than 15% the last 8 weeks or so. Let's put it in 8 weeks. Now, you can see that it's above the 15-day moving average, and it's above the 50-day moving average. It's actually approaching the 200-day moving average. That's on the Nasdaq. If we can have the Nasdaq trading above the 200-day moving average, then we will officially agree that we are out of the bear market. Even though with the percentage it is at the moment, a lot of analysts believe that we are out of bear market on the Nasdaq. Let's have a look at Nasdaq on a weekly chart. This is the weekly chart. Weekly chart, fantastic, very interesting. Uh, yeah, this is the COVID-19 bear market or recession. Here, see, for the Nasdaq, and also we had the bear market, or the correction before the bear market, and as you can see, now we're beginning to move in this direction. if you have been in the market, you've not run out of the market, you've not tried to beat the market by jumping in and out, you should begin to, you see, the night, even on the weekly chart, is very close to the 200-day moving average line. And this is the S&P 500. Guys, be in the market. We are beginning to see a lot of stocks, even EV stocks, that are going up as high as 5-10% in a day. It's what is happening in the market is significant. The market is not listening to anything. It's not about the bond yield curve. We're supposed to be in a recession in the US. We've had two consecutive negative GDP. All these indicators, all these indices, yet the market is going in its own direction.
You have seen the technical chart, you have seen the S&P, you have seen the Nasdaq and the Dow Jones. It's exciting to be in the market. Look, nobody knows anything. Do not allow anyone fluke you. Don't let people tell you, oh, you're watching CNBC, you're watching Bloomberg, you're watching, watch everything for entertainment. Be in the market. Put your money in the market. It's better to be in the market than to put your money in the bank. Inflation will wipe away your money in the bank. You still have the same figure, but the power of your money will reduce. If you talk about inflation and compare it to the market is up. The last how many weeks? 20%. Check with the inflation. Inflation is just about under 9%. So you see, market will always outpace the inflation. It's better to be in the market. Thank you for watching this channel. We continue to produce content that will support your investment journey. It's called again.